Hey guys, welcome to the Silver Report. Here we are. It's Friday, April 7th, 2017. We have gold currently trading at $1,266.60. It's a gain of 1.12%. Silver's trading at $18.44, a gain of 0.55%. And let's get right into some of the economic factors that will be playing a part into the price of precious metals, because we have a lot of danger brewing. Right now, we are in the midst of the largest stock bubble in the U.S. history. And what we need to see, some people might argue 1999 was worse, when everybody was putting their money in blindly in the tech stocks when half of them just collapsed. But what we see currently, when we talk about a tech bubble that was in the 1990s, it resulted in an 85% decline of the NASDAQ. Currently, the 5 highest valued stocks by market cap are tech stocks: Apple, Google, Microsoft, Amazon, Facebook. Combined, these 5 stocks, they make up nearly 10% of the total value of the entire stock market. So what we've been seeing, public money poured into ETFs at a record pace in February. The majority of it went into the S&P 500 ETFs. And now what we're seeing, the price rise in these stocks has nothing remotely to do with fundamentals. For example, let's take Microsoft, one of the largest stocks, MSFT. Last Friday, they were on Fox Business. They were celebrating, they were cheering, saying Microsoft has hit an all-time high. Now, this is in spite of the fact that Microsoft's revenues dropped 8.8% from 2015 to 2016. And its gross margin plunged 13.2%. And so, where's the justification for people putting their money into Microsoft? You see, when you have a market where it's so exciting, in addition to this onslaught of retail cash moving blindly into the stocks, margin debt on the New York Stock Exchange, it hit an all-time high in February. Both the cash flow and margin debt statistics are a big red warning sign. They're flashing red right now. This only occurs when the public becomes literally just blind to risk, and they run on the assumption that stocks are only going to continue to rise. This is largely because a lot of the propaganda that is pushed out by the Wall Street Journal. And what we've seen, this is the most dangerous stock market in anyone's listening's lifetime. The loudest bell ringing is a signal. We look at the market's valuation of Tesla, for example. On Monday, the market cap of Tesla, $49 billion, surpassed Ford's market cap, $45 billion. And now, focus on the fundamentals. Tesla delivered 79,000 cars in 2016. Ford delivered 2.6 million cars. And so, they were even mocking people on Twitter for short-selling Tesla, laughing at them. Aha, you missed out on the big rally. Now, Tesla has never made money and never will make money. Next to Amazon, it's the biggest Ponzi scheme in U.S. history. Without the massive tax credits given to the first 200,000 buyers of Tesla vehicles, the company would be out of business by now. But once again, the general public, has been seduced by the mainstream media into throwing money blindly at anything that moves in the stock market, chasing dreams of risk-free wealth, when they really don't comprehend the fact that they are in tremendous risk. 99% of them will never take money off the table and will lose everything when the stock market bubble bursts. And only the biggest stock bubble in history is capable of enabling operators like this to continue. To see stocks and companies without any earning potentials. In fact, companies whose earnings have been declining massively to have rallies. The only people making money in a market like that without fundamentals being solid are people that are making money off of speculating. So going to cash before the herd begins to stampede is the only way you're going to save yourself from massive amounts of losses. It is a mind game right now that they're playing on you. And it is flashing danger signs. When you look at market valuations, we are in for carnage. Go to silver, go to gold. Half the world is already. We see the gold demand and silver demand. Look at the price. It's astronomical. People can see it. The writing is on the wall. The only people who can't see are the people who are still blindly putting their money into valueless companies that their earnings reports are not going to reflect the amount of money that is in there. It's a con game. It's a Ponzi scheme. They're making money. Look at Twitter. One of the founders of Twitter just sold 30% of his stock. What does that tell you about what he sees coming? Thanks, everyone, for putting your money in. He's taking his profits and he's going to run. That's it. And that's what smart money does. Apparently, what we're seeing is one of the most dangerous stock markets in history. And that's why silver and gold has been a big buy signal. All right, thank you guys for joining me here on the Silver Report. If you like the content, be sure to subscribe, like the videos, share the videos, get the word out. I thank you guys so much for stopping by. As always, stay safe.